And before we go, I just want to mention that Charles Hoskinson has made some pretty wise observations. He has been given upon us in this delightful month of September, having been dropped on us. That's what we'll be talking about next. Prior to doing, the Fed is the central theme. Let's check out the Fear and Greed Index on my screen, which has dropped once more, before we even discuss the Federal. So much further into the heart of the darkest terror. Are we taking a risk on this September, with the 20-point score down 4 points from yesterday? Our age was 24. We were only in fear a month ago, and now that we're back down to 20, that's where we were last week. We had just stepped into much greater terror. We'll watch how that plays out. Here, we'll get some recent news. Gary Gensler, the chair of the SEC, has stated that he is in favor of giving the SFTC more authority to supervise and control Bitcoin and other cryptocurrencies. So there are some fairly intriguing developments. And again, the fundamentals are continuing to move in the correct direction, which is unquestionably optimistic for cryptocurrencies. However, the fact that the pricing is not reflecting it may be a sign of things to come in the mortgage market surveys. All fine, let's go on. This morning, we received some very, very huge news. Most likely, you were too sleepy to see this. But we did watch a tiny amount while tuned in. We might have viewed a Q&A session with Fed Chair Jerome Powell at the Cato Institute. A libertarian think tank called Cato Institute recently welcomed Jerome Powell to their online conference, which they were holding today. And it appeared as though they were enjoying themselves. Drum didn't discuss predicting policy as much as you may have expected. He did, however, make a few remarks about cryptocurrency. Therefore, let's look at those. Here, the Twitter user DB was able to record some useful notes. So here are some remarks made by Jerome Powell about cryptocurrency. You'll notice that a lot of it has to do with stable currencies, which need to be properly managed. Stable currencies can play a part in the financial system, but first, this issue needs to be addressed through regulation. Jerome's reply is probably the most upbeat one in this. Powell distinguished between stable currency and cryptos that are supported by the UN in this speech. The final one was that, according to Powell, unpacked cryptocurrencies haven't really provided much in the way of public interest in payments. So there are some insightful remarks. They're a mixed bag, so feel free to use them any way you like, Tim or yeah. I mean, I find it to be intriguing. You know, I don't know why you brought up this, but there were some topics he discussed with COVID once more. He's accusing COVID and INSPARE of being solely responsible for the inflation, even though they have unquestionably suffered as a result. However, I believe that when you consider the impact that inflation has had, it was a long time coming. Simply said, COVID sped up the procedure. I do believe that some of the points he made here as a whole are extremely fascinating. I'm not even positive that he was more hawkish after his last address, even though it looked that way today. It just feels like he offered a ray of optimism. Yeah. Not necessarily implying that we'll drop below 50, but also not essentially tying us to the 75 that many of us suspect, I guess. But that's just what I think. We probably should have waited for a little more information to surface. Yeah, let's go on to multiples now. In light of the fact that he was featured in a Cato's journal, which is as conservative as it gets without being a Republican, literally none of them are Republicans. But you'll understand what I'm saying if you understand politics. If you return to my screen and look at the CME future predictions, which are at 87% 75 basis points, you will see that the optics of being on that channel are likely as hawkish as they can be. On September 21st, the momentous day of the Federal Reserve's rate decision, which was presided over by Jerome Powell, we continued to almost lock in the fact that we would receive 75 basis points. We're not quite done with the world of central banks, though. As you struggle with the Russian energy crisis and rising food prices, the European Central Bank made headlines by initiating a historic interest rate hike. The ECB president is visible there. Christine Lagarde is my best bet as to her nationality, which is French given her name. However, we'll move on to the European Central Bank's recent decision to raise interest rates to their highest level, perhaps ever. rates were raised by the central bank by 75 basis points. I questioned where they got their ideas from and indicated more tricks. Rates are rising in all major economies as they fight to contain the spiraling inflation. So, that won't be good for the European stock market and will probably cause some bleeding in today. The US equity market and the indexes are most likely a close read. Tim, what do you think about this, though? I asked this topic this morning on Twitter, and I'm receiving a few responses. I believe the majority of people are responding to that. They believe that Gary Gensler's announcement is more important. But I questioned him, which is the bigger news of the day, the fact that the European Central Bank just won 75 basis points, the highest it's been in a very long time, or Gary Gensler saying that he supports the idea of CFTC regulating Bitcoin. I'll admit that it's huge that Gary Gensler is going ahead and saying, I support that, which is what I believe to be the bigger story of the day. However, I'm wondering why the European Central Bank established interest rates this high as I sit here. Is this simply a can, or what? Is this the first sign that the world's ability to be affected by interest rates is nowhere near beginning? Is this, for example, a sign that not only other nations but also the United States will continue to struggle with high inflation? Because it's not as easy as you think, remember? Because of the way our international economy, not just national economies, but global economies, is set up, it is the European Union's problem. When one economy is struggling, it affects other economies as well. Therefore, even while I really appreciate Gary Gensler for saying this, in my opinion, it does have long-term optimistic implications for Bitcoin. I am worried about what the European Central Bank just did, at least in the near future, because of what it might mean for the future of the global economy. In that case, not only the United States, but definitely Bitcoin and cryptos will be impacted by this. Yeah, well, let's take a little bit of a deeper dive there because it's an important question. Which is more significant, the ECB decision or Gary Gensler? Quote, well, let's take a little bit of a deeper dive. So he was talking at an industry conference on today. And Gensler said he looked forward to working with Congress to give the SEC sister agency additional powers to oversee and regulate crypto non-security tokens and related intermediaries, so that could potentially come back to bite you where there's a whip, there's a way kind of a thing going on in non-security tokens. So maybe he thinks that there's some non-security and some security tokens, as they've said in the past. Bitcoin is not a security is pretty well determined in that regulatory community. But he said, let's ensure that we don't inadvertently undermine securities law underlying $100 Chilean capital markets. The securities law have made our capital markets the envy of the world, so looking to protect the capital markets probably goes on to say some more things, but we're gonna move on. One last look at the man himself there, Gary Gensler. What a good-looking guy. I'd love to hang out with him and love Gary, just have a chat with him. But let's keep moving. If you're like me, crypto taxes can be very stressful. Unlike the past with the IRS was a little lax this coming year and future years, there will be a lot more involved in checking in on your taxes, and you might want to go ahead and get a CPA. Well, I've got just the guy for you. With a link down in the description. Anthony Price can help save you every dollar you can and your crypto profits, and make sure you don't pay Uncle Sam a single dollar more than you have to click on his link. Take a free 15-minute call. If he can't save you money, he won't take you as a client. Check him out today. Bitcoin is market's early warning alarm, says Bloomberg analysts, so this is a little bit of an interesting take. So not everybody in the world of investment really knows too much about crypto and Bitcoin. So this is kind of a perspective from their view. Let's take a look at that. Folks who are a little bit less crypto educated but very investment educated. So thinking non-crypto Wall Street, Bitcoin might serve as an early warning alarm for the rest of the market. According to Bloomberg strategist Mike McGlone, he said, although all risk assets are impacted by the same relationship, Bitcoin appears to have an edge over equities in terms of responsiveness as it reacts to subtle shifts in liquidity conditions, with more pronounced moves at significant inflection points. And it's interesting that this article should come out now because yesterday on my drive home from the show, I was actually thinking the exact same thing, is that Bitcoin is almost in this weird phase of like Fed-dominated global markets, that Bitcoin is almost becoming kind of the front-runner indicator of where markets are going to go, because it is just I don't know why the market treats it like that. But I think that, there's a lot more that goes into companies like Apple and Google's and Amazon's fundamentals. And so the market doesn't want to quickly react with those companies because it takes a lot longer to understand what's going on in the short term with those corporations that then get translated into the major equity indexes, whereas Bitcoin is kind of just like it's a currency, right? So it's a high-risk currency. So it's almost kind of in this weird phase kind of become this tool that just is the front-end runner, a leading indicator of where the market's going. And it's interesting. And I don't know if I fully believe that yet, was just something I was thinking about. But it's interesting to see that inclination kind of reinforced here by Boom when a Bloomberg strategist, Mike McGlone, well, we're going to move on, but that is a kind of an interesting look into way that the outside world sees our world. As you could hear a conversation on a wall on Wall Street of like, oh, well, Bitcoin went up, maybe the market's going to go up today. And it's just a Bitcoin, maybe a more clear indicator of sentiment in the market, because you're just willing to trade your dollars for Bitcoin that day. Maybe individuals will be willing to trade their cash for Apple and Google the next day. Anyway, let's continue. Some intriguing Celsius case developments. Since 2019, Celsius has been insolvent. A Vermont regulator says. So far, things don't look good for Celsius. Citing the Vermont regulator, he claimed that Celsius raised and supported the market price of SEL by raising its net position and selling the SEL token by hundreds of millions of dollars. As a result, the company's SEL holdings on its balance sheet and financial statements are being artificially inflated. Ethan McLaughlin, Vermont's Assistant General Counsel, was named in the complaint on Wednesday. That is MC Laughlin, then. That's it, he Laughlin. Yes, I have never heard of the name. The name McLaughlin has never been printed. Interesting usage of the F phonetic there. Languages like English are challenging. However, eliminating the company's net position and SEL obligations, its assets would have exceeded its liabilities since at least February 28, 2019, which is probably where that is coming from. Additionally, it's possible that these actions benefited Celsius insiders at the expense of retail investors. Therefore, the findings of the Celsius and SEL investigations there are clearly not good news. However, it is somewhat unexpected that there have been such serious allegations that they have been bankrupt ever since she started doing it. And I wonder if the same is true of Three Arrows Capital, Voyager, and possibly some of the other men who made way too many leveraged investments using the funds that the retail sector had entrusted to them. However, they are making progress. Charles Hoskinson provided us with his informative and fascinating thoughts. Charles Hoskinson, the creator of Cardano Crater, claims that in a sea of red, the cryptocurrency markets are disconnected from reality. Let's hear what he has to say then. Everybody who uses cryptocurrency agrees that the markets are disconnected from reality. Never has Cardano been more powerful. Sincere to say, the majority of other industry-wide projects are also strong. You don't, however, see that reflected. Only a sea of red macro factors consistently prevail. Therefore, the macro factors he is referring to are probably just the current market perception of cryptocurrency as a high-risk asset. Inflation and the Fed's response to inflation are the other macro factors, of course. The incredible innovation taking place in the code of these blockchains, especially Cardano, is being somewhat overshadowed by all of this. Additionally, I'm certain that he would concur with Charles regarding the theorem. Always keep in mind the true goal of the technology, the issues it resolves, the people it benefits, and the novel experiences that are made possible by it. Cardano is changing the world because of all of you, and our best days are still in front of us, which is a very, very encouraging sign of optimism. The announcement by Hoskinson comes before the Cardano's Vassal upgrade, which is scheduled to go live on September 22nd. What do you think about Charles Hoskinson's remarks, Tim? The idea of price doesn't always give us the clearest picture in the same way, as we hinted at when speaking with Caleb Franson yesterday. Although Cardano is currently down more than 80% from its all-time high, Charles claims that it has never been stronger. I would agree with him if we were talking about the period when it was up around $3. It also did not accurately reflect the fundamentals. And I believe there were many people in that boat. Because of this, a lot of people started to dislike Cardano. And I would agree with them that Cardano was not worth $3 back when it was at $3. That was simply the price at which people were willing to go buy it and sell it at, and they agreed upon it. That is the cost of that item. Price is simply what we are prepared to exchange at the moment, not always anything that reveals the fundamentals. Jim always said this, though, as I just noticed in the comments. The price is upstream from the fundamentals. Why does that matter? The principles of a project will change before the pricing catches up, just as things happen upstream in a river before they trickle down lower. Therefore, what we're witnessing right now is a very, very favorable situation and a terrific chance to buy cryptocurrency projects that are far more valuable than what their pricing actually indicates. That does not necessitate a sharp increase in price. Now that we've said that, it doesn't imply that Charles should have stopped speaking because he suggested that suddenly people would go, "Oh, yeah, you're right, let's go buy Cardano at a fantastic bargain," even though the price might still fluctuate. I believe there is a fair chance it will move higher as we exit. But the point here is, let's look at something that cryptocurrency might be compared to frequently, the stock of Apple. I recall the precise year, so please pardon me. But this is a topic that is frequently discussed. There was a moment when Jesse Apple's stock, Amazon stock, was absurdly low. Therefore, when individuals inquired, they said things like, "Does this imply the company is dead?" When asked, Jeff Bezos replied, "I know that my firm does not reflect in the stock price that my company is bigger and doing more, greater things than the market price says." And as expected, the price began to soar. Anyone who purchased during those periods when the price was at an all-time low is currently very wealthy. Yes, but there is a similar thing. And I appreciate that Charles is talking about other cryptocurrencies besides just Cardano. After all, we're more of a price analysis channel. There are many cryptocurrencies out there with incredible fundamentals. So occasionally we get into that situation and forget how solid the fundamentals are. And we must keep in mind that there is a proper time to consider price. When evaluating your investments, you must be aware of the price. However, if you don't focus on the basics, you might be tempted to FOMO into projects at the wrong time. Like for example, a $3 Cardano back in 2021 when it should not have been there, or flood out of the space like a 47-cent Cardano in 2022 when it really should be a lot higher with everything coming out. So I love that he said this. This kind of wraps up what we were even talking about yesterday, that concept of there is a difference between price and value. I know a lot of people don't like to think of it that way. But it is, and this is the bottom of a bear market that suggests the price is well below value. Any purchase that you make right now will be profitable, and if that fundamental value of a project is a good one. So nice quote, fantastic quote from Charles Hoskinson. I believe that wraps up the situation. We've been discussing this channel for a while now. Absolutely. Our market polls are about to come to a close, but I still have one more delicious nugget for you. I might have to fast return to my screen for this. Bloomberg reports that despite the market downturn, Polygon will keep employing really rapidly, then. The head of human resources at Ethereum scaling solution Polygon spoke to Bloomberg about the company's hiring intentions. She stated that by the end of 2022, the business aims to hire 200 new employees. Polygon rate just received $450 million through a token sale in February. And if you'd like, you can read more about that at the block.co. It goes into detail about that $450 million token sale, which is quite interesting. However, I thought I'd already mentioned that. With that, everyone, the market polls are now closed. I appreciate you all for reading and watching. Please hit like on this video straight now. Just click the like button now. Just like Gary Gensler would want you to, you know you want to go down there because it's enticing. So go ahead and make it happen. Thank you so much. Please also think about subscribing. Let's continue grooving and moving.